All right, Rocketeller Nation, RT here. If you're just joining us, welcome to the channel where we don't just casually drop terms like macro, fundamentals, ratio charts, and market cycles. We cut straight through the noise and hit the only question that counts. Where is the real money flowing? Today for Deep Dive Series, we're jumping into Andean Silver, ticker ASL on the ASX, a silver-gold restart play in Chile that seems straightforward at first glance, but there's way more happening beneath the surface. All right, let's get ahead. So first up, the setup. Andean Silver owns 100% of Cerro Bayo, a past-producing silver-gold mine in southern Chile's Aysén region. This is not some random explorer drilling into mystery rocks and hoping the mountain says hello. Cerro Bayo already produced around 45 million ounces of silver and 650,000 ounces of gold. That matters, okay? Because history does not guarantee future success, but it does prove this district can actually produce metal. Now the resource. Cerro Bayo currently has 111 million ounces of silver equivalent at 353 grams per ton AgEq. That is high grade by modern standards. But here's the catch. Only 18 million ounces are indicated, while 93 million ounces are inferred. So yes, the size is exciting, but the confidence gap is real. The next big job is conversion. The asset has three big advantages: grade, infrastructure, and exploration upside. High-grade vein systems can be powerful because you don't need to move mountains of low-grade rock just to make money. Then you have processing facilities, camps, and existing mine infrastructure. That can reduce restart friction. And with around half the tenure undrilled, there's still room for new discoveries. Management matters. And this team is not exactly showing up with plastic shovels from a toy store. You've got capital markets experience, mining operations experience, Latin America execution experience, and exploration talent from serious names. The market usually rewards teams that know how to raise money, drill smart, and move projects forward without lighting shareholder capital on fire. Ownership is where it gets interesting. Board and management own 16.9%, which gives decent alignment. Institutions own 46%, and yes, Sprott is there too. When Sprott shows up in a silver junior, people pay attention. It does not make the stock risk-free, okay? But it improves credibility, visibility, and potentially funding access. And before we go deeper, if you're tired of market commentary that sounds fancy but somehow says absolutely nothing, you'll probably like Rocketeller.com. Over there, we break down macro, cycles, fundamentals, stocks, miners, ratio charts, in plain English, not Wall Street fog machine language. So, subscribe to the YouTube channel, and for the newsletter, visit Rocketeller.com. Again, Rocketeller.com. Let's figure this market out together. Now, valuation and capital structure. At $2.45 per share, fully diluted market cap is around 562 million Australian dollars, or roughly 406 million US dollars. That is not dirt cheap, but not absurd either for a high-grade silver restart story with infrastructure. The big issue? Dilution. More drilling, studies, refurbishment, and restart planning will likely require more capital. Here's what could go wrong. No public PEA, no PFS, no feasibility study, no official AISC, no official CapEx. So the market is pricing potential, not proven economics. Underground vein mining can be tricky too. Dilution, narrow veins, grade control, recoveries, permitting, Chilean regulations, all of it matters. This is not free money, all right? The timeline is all about 2026 and 2027. Drilling, discovery, resource updates, technical studies, and most importantly, converting inferred ounces into indicated ounces. If ASL can show a credible restart plan with stronger resource confidence, then the market may start treating Cerro Bayo less like a story and more like a future mine. Now the fun part, silver leverage. The model shows that at $150 silver, using 4 million ounces AgEq production and $20 AISC, Cerro Bayo could generate $390 million in annual free cash flow after haircut. At $200 silver, that jumps to $540 million. Big numbers, yes, but remember, this is simplified leverage math, not company guidance. So what's the verdict? ASL ticks a lot of boxes: high grade, past production, infrastructure, institutional backing, insider ownership, exploration upside, and zero debt. We rated it as perfect 5 stars. But the main weakness is clear: no public economic study yet. In plain English, this is a compelling restart story, but the company still has to prove the machine can actually print cash. All right, guys, that's a wrap for today. Hope this breakdown helped paint a clearer picture on Andean silver and why Cerro Bayo has the potential to get seriously exciting if they finally deliver on execution. Quick disclaimer: everything here is for educational purposes only. All calls are yours to make, so do your own research and trade at your own risk. If you like this one, smash subscribe and hit the bell. Our newsletter's waiting for you at rockteller.com. Got any other names you want us to check out? Fire them into the comments. Stay sharp, stay curious. All right, catch you in the next one.